Real challenging 2 trading days since the FOMC yesterday. Just extreme chop in the markets. We are at minus 3K today on the 200K, minus 500 on the 50K. We are in a $2,500 roughly drawdown. I'm going to show you the drawdown curve. Let me go ahead and show you that to show you where we are on this. We welcome drawdowns. Those are drawdowns are a frequent part of trading, and we had a nice run up. And now we're going through a drawdown. And so we had $2,500 drawdown per micro, $25,000 per emini, and we're trading a 6/10 of that in the 200K portfolio. So let's look at the calculations so we can see the last equity. The last equity peak was March the 28th, and we closed in on an equity peak on the 4th. And then Tuesday and Wednesday were challenging. Today was challenging. And so we've had 3 pretty challenging days in a row. Monday was a nice gain. Tuesday, Wednesday tough. Today was down. So down 5K per emini. Again, that's 3,000 in the 200K portfolio, and it's down, like we said, 500 in the 50K portfolio. So here we are in the market. FOMC minutes released yesterday, and just major chop conditions where the market likes to run from the lows to highs, stop running lows, stop running highs. We were up on the day down here, thought the market should have rolled over, and we are in a market that is going to do what the liquidity wants to do instead of what it should do fundamentally, because the liquidity is still there. The Fed is going to reduce liquidity, but they haven't yet, and so there's lots of extra liquidity in the markets, and I think the market's a little bit in denial in my opinion, but we'll see. I think the market should have a much steeper pullback than what we're seeing right now. Here is a monthly chart of the emini S&P futures. Here's the pandemic low, and we know this was driven by massive Fed stimulus, and the Fed is going to start putting that into reverse. And so I think the market has some correcting to do, more than we're seeing here. I don't think we know the real picture yet because of all the liquidity has distorted price discovery. So let's take a look at the trades on the day. So here are the trades on the day. Adaptive moving average had a positive day, had a short trade that lost, a long trade that lost, and then it got short, and then it reversed to long. And so Cobra CT3 though was stopped out right here at this low point. The market continued to go lower, and then we had Night Trader was profitable on the day, and Tick Fader was profitable on the day. The ES strategies overall were profitable on the day. So 3 out of the 4 ES strategies that traded today were profitable. The NASDAQ strategies, EVP1 was profitable. Tick Reversal, one of our top strategies, has had 4 losers in a row, and we're not used to that. This has been an ace, but the last 2 days it is just, I mean, you see the severe nature of these reversals and how unusual this market is, how unnatural this price action actually looks when you look at it with these trading signals, how this market should go down, but the excess liquidity wants to drive it up. It is not used to the Fed going against prices, so the market is used to a scenario where if the market goes down, the Fed does something to cause it to go back up, and now the Fed is going to move in reverse, but the liquidity is still there, so the market is still driving prices higher, kind of calling the Fed's hand in my opinion. The market is still pretty close to all-time high. So here is a snapshot once again. Let me find that for you. And so here's a snapshot, market near all-time highs, and I think there's some more work to do on the downside. We'll see. And 60-minute breakout down on the day, tried to get in on the long side. We are more than welcome to trade both the long and short side, and this market could in fact drive higher and drive to new highs with the existing liquidity. I just think it's due for rollover. We never really see a full selling cycle, and if you believe in mean reversion, which I do, we're due for downside. We're due. You don't get to just go up and up and up, and then on sell-off days you always get to bounce back. There never is normal markets have days where there's selling that scares even the bulls, and we don't really have any. We haven't seen many of those days. There's been more frustration in the slowed downtrend, but there hasn't been any real panic selling in a long time. So We'll see. Cobra 3 down on the day, 2 days in a row, made recent equity peaks as well. You see, market, it ought to go down, in my opinion. You know, our signals aren't always correct. I don't believe that our signals will always be correct. But if you just look at the market patterns here, and the way this looks, the way it reverses, it just looks overly propped up, I guess. We continue to use that word as well. Cobra 3 2022 stopped out overnight, and those are the NASDAQ trades. We had 1, 2, 3, 4 NASDAQ trades that lost and 1 that made a small profit. So the NASDAQ was our biggest loser on the day, and those are the trades on the day. Let's look at the drawdown curve once again. Again, drawdowns are a normal part, and I'd rather have a fast drawdown than a slow drawdown. And we're going through a very fast drawdown right now the last couple of days, and so we're back at these 25K levels. And so the worst case drawdown is about 27K on an end of day basis. In the last 10 or 11 years, 37K going back to 2008. So looking for a bounce here. It's also a drawdown alert to start. And those are the trades on the day for April 7th, 2022. 1 trading day left in the trading week. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.